All right, today's Tuesday Tidbit is what is a HELOC? Home equity line of credit is what that stands for. So a home equity line of credit is typically a second mortgage. Second mortgage simply meaning that it's in second position behind another mortgage, the first mortgage. Home equity line of credit is typically like a gigantic credit card. I say typically because every institution is going to have different terms and rates and costs when it comes to their home equity line of credit structure. The most common structure is that you're going to have an initial period of time that's called the draw period and a period of time following that that's called the repayment period. The home equity line of credit is like a gigantic credit card. They would give you a limit, let's say $100,000. It works against the equity of the house you own. So if you sold that house and you had a balance on that home equity line of credit, you would walk away with that much less because they're going to have to pay off first mortgage and then whatever's outstanding on the second mortgage. So just like a credit card, though, you have an available limit to you, and you only pay interest on the amount that you have extended. So if you have a $100,000 home equity line of credit and you only owe $50,000 on it, so you have a $100,000 limit, but you only have a balance of $50,000, you're only going to be paying interest on the $50,000. Pretty nice. It gives you the flexibility of being able to borrow money and pay it back, borrow money and pay it back. So it's really nice in that it gives you a lot of flexibility and you only pay interest on the amount you owe. Now, since it's a second mortgage, it's in second position, they typically have higher interest rates than the first mortgage would. Second mortgage, a little bit more risky. If you went into foreclosure, they're going to get paid out second. So it's a little bit of a higher risk endeavor from a lender standpoint. Closing costs are very nominal on those, typically only a couple $100. An appraisal may or may not be required. Our home equity line of credit has a 10-year draw period, so you have 10 years to advance funds and pay it back, advance funds and pay it back. And then after that initial 10 period, it becomes locked down. So in the second 10 years would begin the 10-year repayment period. Most home equity lines of credit have a variable rate. Ours has the ability to lock in a portion of the money at a certain rate and then have the remainder kind of float and vary with market conditions. That's our home equity line of credit. That's what home equity lines of credit are. We'll be doing another one, a different type of second mortgage in a little bit called a home equity loan. Thank you. Bye.